So a common question that I get often is, what exactly is the Mills Act? The Mills Act is a state law that allows homeowners to get into a binding contract with the city and their local jurisdiction in order to receive a property tax reduction in exchange for preservation, restoration, and maintenance of their respective historically designated property. So let's say that your home is now historically designated and you want to apply for the Mills Act. So you must apply first and foremost to the Mills Act, and there is a small application fee. And then you go through the process of review and approval with your local planning department. So the purpose of the Mills Act is to incentivize homeowners financially to maintain their properties, their historic properties, to a standard defined by the United States Interior Department. And the reason why that's beneficial to the city is because they have deemed that it is a benefit to the public. So for example, a property is eligible for historical designation and a subsequent Mills Act contract if it is architecturally significant for the period in which it was built, or there was a person of interest associated with the property, either through they occupied the home or perhaps they were a notable architect or designer. So the financial incentive to homeowners is a break on their annual property tax payments. In California, it's approximately anywhere between 40 to 60%. And in our area, if the average price of a home is $1 million and the annual tax rate is approximately 1%, that's $10,000 a year in your tax liability. So cut that in half in most cases on average because of the Mills Act contract, you save 50%. You've now gone from $10,000 to $5,000 a year in your property tax liability. Now this tax break comes with an expectation from the program, from the Mills Act. And that expectation is that you will use some of that savings in your tax liability to put back into the maintenance and restoration and preservation of your property. That's the thinking and the logic behind the incentive, is give the homeowner a tax break and the homeowner will reinvest that savings into the property in the end to benefit the public good. So I know when you hear contract, expectation, law, that it can be a little bit daunting. And I don't want to discourage you from looking further into the Mills Act because the actual requirements aren't that strict. It just requires attention to your property, which you should be doing anyways. So if you'd like to learn more, or you actually want to see a copy of a Mills Act contract, please just let me know. Do me a favor, always remember to consult your tax or financial professional. I'm just a real estate guy.